Hi friends, our next topic is accounting changes and error correction. Here we'll discuss about changes in accounting estimates, changes in accounting principles, changes in accounting entity and error correction. Our first topic is changes in accounting estimates. What is changes in accounting estimates? Changes in accounting estimates occurs when it is determined that the estimate previously used by the company is incorrect. Previously used by the company is incorrect. And what would be the example of changes in accounting estimates? Let's say a company has estimated in the last year that the total account allowance for AR would be 50%, but in the current year company is saying that it should be 70%, not 50%. So this situation is changes in accounting estimates because company is saying that whatever they have previously used is incorrect. So in that case, what will happen? These changes are implemented prospectively in financial statement. What is the meaning of prospectively? Prospectively means the effects of these changes should be documented in current year and all the future years. So no effect should be given to the previous year financial statements even if you are showing a comparative financial statements. So the next point is no changes to prior period financial statements. Okay, so now what should be the disclosures if you are doing the changes in accounting estimates? So disclosures can be of two types. One is changes affecting future periods and the other one is changes affecting current period only. So what would be the disclosure in case of changes affecting future periods? So the example for changes affecting future periods is changes in estimated life of depreciable asset. So let's say company last year said that fixed asset can be depreciated for 10 years, but now company is saying that it should be depreciated only for 8 years. So in that case, the depreciation amount for current period and all the future life of that fixed asset is changed. So in that case, you'll have to disclose the effect on the income. So the difference in the depreciation amount, which should have been shown if the life of the asset was 10 years, with the depreciation using the life of the asset as 8 years, should be disclosed. Okay, and the related effect on per share information should also be disclosed. And in the case of other changes, like of changes affecting current period only, we have discussed this, that allowance for receivable is the example for this. So if there is a material change, see, you'll have to document the change in accounting estimate, but the effect, like you did in the changes in affecting future periods, the effect of that change should not be disclosed in case the change is only affecting the current period. So what would be the example of changes in accounting estimates? Changes in allowance for doubtful debts, changes in work in progress inventory, changes in the estimates of warranty obligation, revision of estimates of discontinued operations. And we have one extra point here, like some changes in accounting principles are inseparable from changes in accounting estimates. What does that mean? That some changes are accounting estimates as well as accounting principles. So the example of that would be changes in method of depreciation. So we have already discussed that this change is a change in accounting estimates. Now in the next slide I'll tell you how it is change in accounting principle. So our next topic is changes in accounting principle. What is changes in accounting principle? Changes in accounting principle is a change in accounting from one GAAP accounting principle to another GAAP acceptable accounting principle. So the catch here is one GAAP accounting principle to another GAAP acceptable principles. So let's say that there was a new codification issued, and due to which you have to change your accounting principle. In that case, it should be called change in accounting principle. And in case of change in accounting principle, you will have to implement these changes retrospectively in financial statement. What is the meaning of retrospectively? You have to restate the prior period financial statements to show these changes. So let's say you are showing a comparative financial statement for 2 years, that is previous year and current year. So in current year, if you have changed the accounting principle, you will have to implement these changes in the previous year financial statements also. And in that case, what is our next point? Cumulative effect of changes in accounting principle should be accounted for in the beginning retained earnings of the earliest period reported. So if you are showing if you are showing your financials in the comparative basis, so what is the earliest period of reported? It is the previous year, and then here also you will uh, show the effect of change in the beginning retained earnings, so that the effect looks like it was implemented in all the prior years, right? And in case only current year's financial statements are shown, then in that case you will only change the opening retained earning balance for current year only. So the next point is cumulative effect of change should be what retained earnings. So this is the meaning of cumulative effect of changes. So should be what retained earnings would have been if the new principle had been applied to all the prior periods. So that means if from year one, if this principle had been implemented, then what would have been an opening retained earnings? This is called cumulative effect of financial statement. What is the example of change in accounting principle? A newly issued codification or another method is considered more reasonable or preferable. So there are two exceptions to changes in accounting principle. First exception is when it is impracticable to estimate the cumulative effect. So let's read this out, then I'll explain you this. When accounting principle for valuation of inventory is changed from any method to LIFO method. So in case of LIFO method, you cannot estimate the what inventory would have been in stock where if LIFO method is used, right? Because it is impossible to estimate the value of inventory which should remain in LIFO method have been used. So what will happen in that case? You will document the effect on prospective basis only. So you do not need you do not have to go back and calculate to all the prior years. You'll just keep documenting in the new method in going forward, not backward. What is the other method? Other thing, it is change in depreciation method. So here change in depreciation means, as discussed earlier, these changes in accounting principle are inseparable from accounting estimate. So we have discussed this, that it is inseparable from accounting estimate because this involves estimates how depreciation should be charged. So we know that change in accounting method is kind of change in accounting estimates, because you like let's say you were saying that the depreciation should be on straight line basis only, so it means that equal depreciation for all the years, but now you are saying that it should be in the declining balance method. So in case of declining balance, in the earlier years you'll charge more depreciation, but in the later years the depreciation will reduced. So here it is a change in accounting estimate, because you earlier have estimated that it will depreciate equally, but now you are saying it will depreciate more in the earlier periods and less in the later stage. So this is a change in accounting estimate, but this again is a change in accounting change in depreciation method. So hence in these cases also the changes should be accounted for in prospective basis only. Next topic is change in accounting entity. What does that mean? Change in accounting entity is when composition of entity being reported on is changed. Examples include change from individual to consolidation of entities. So in case of consolidation of entities, if you are consolidating financial statements of two entities in current year, you'll have to consolidate the financial statements of previous year also, right? So what does that mean? That means that it should always be implemented retrospectively. So this means that all the periods presented in comparative financial statement should include the effect of change in equity, change in entity, sorry. Yeah. So if if you are showing comparative financial statements for 3 years, but you have you have consolidated the entity in current year only, in that case you will have to go back to all both of previous 2 years also, and you'll have to show the comparative financial statements also in consolidated basis. Disclosure: cause and nature of change should also be disclosed. What is the next point? Error correction. The definition: error correction is the correction of an error in financial statements that were previously issued. So the main difference between this and change in accounting principle is, in case of accounting principles, the changes from previous method to current method both were as per GAAP. But here there was a mistake, like there was a error, correction of error in the financial statements. So error correction can be an error in measurement, recognition, or presentation or disclosure. Changes from a non-GAAP method to a GAAP method. If you are correcting something, that means the last year whatever you have shown was not as per GAAP. If the year of correction is not presented, so let's say you are comparing, you are showing for X and X1 year, but X1 and X2 years, but for X year you are not showing the financial statements. Then what you have to do is you have to change, you have to show the effect of correction in the opening retained earnings of earliest period reported, right? So in this case, adjust the beginning retained earnings of the earliest period reported, or if the year of correction is presented, then correct it within the year, within the financial statements, and no other effect is required. Correct the error in those prior years. So thank you for watching. Please share your questions on the comments. I'll try to revert to all of them. And these are some of my social media handles. Please do follow me on that. Thank you.